Ladies and gentlemen, welcome back. The time has come for us to finally start talking about entries. So up until this point, you want to think of each strategy, each setup model as a recipe. Up until this point, we've been teaching you all of the individual ingredients, the fair value gaps, the order blocks, discount and premium, optimal trade entry, draw and liquidity. Guys, these are all of the individual ingredients that make up a recipe that is a trading model, and that is a complete system. Now we get into how to start actually formulating recipes, formulating setup models, trading strategies that actually work. And in order to do that, we must understand where the highest probability entries actually form from. And the way we do that is using all of the individual ingredients that we've collected up until this point. So by this point, we already know, ladies and gentlemen, that the best buys happen from a discount, so underneath the 50% level, and the best sells happen from a premium, which is above that 50% level. Now, we've also refined that down to OTE, which is the golden zone, the most sensitive level of both a discount and a premium. So we know that the actual highest probability entries are going to form from this golden zone. Now, if you've ever wondered why a certain fair value gap failed while another one works, like if you've ever had this scenario here, where you're trying to take a trade off this fair value gap right here, but instead of responding off it, price actually goes down and stops you out, and then it'll deliver from a fair value gap just below it. And the reason being is because this was still above the 50% level, and it was still slightly in a premium. So price had to reach for a discount in order to continue buying up. And the same thing with here. If you've ever been in a short position before and got stopped out just to see price deliver from a higher bearish fair value gap, likely the fair value gap you were trying to tee off of was in a premium instead of in a discount. So that's just one way you can tell, guys, whether or not a fair value gap, whether or not an intraday point of interest is going to actually play out. Is it in an OTE golden zone, or at a bare minimum, is it a discount for a buy and a premium for a sell? So let's go ahead and start looking at this, guys. And then we're going to refine into how we can actually use this to get an entry. So let's go ahead and take this price action leg right here, guys. So what do we have here? We have a bearish displacement leg. And then we have a bearish fair value gap that lines up with the OTE. And then price is already in a discount. So this is the 15-minute bearish gap. We've got that OTE/discount, and we also got a golden zone up there. So when we see this, where do you think price is going to go? Well, obviously, it has a high likelihood of doing one of these. So let's go ahead and see what happens here. We already kind of saw it, so you know that that is what ends up happening. We reach for 62% discount, which is within the OTE, not necessarily golden zone, but within the OTE, and then we go ahead and we sell off. So this already is giving you some insight into how to find entries. Now, depending on what entry you take, you could have done a top tick at the bottom of OTE. That could have been a model for some of you, and that would have worked out very well in this scenario. But you could have also used this insight on the lower time frame as well. So what do we have here? Once we go up into that fair value gap on the 15, we have a change in the state of delivery. So a change in the state of delivery there. If we take that displacement leg, now what is that right there, guys? That is a discount. Then what else do we have in there? We have a fair value gap. So we have two confluences, guys. Three, actually. We had a change in the state of delivery from a bearish 15-minute fair value gap, left behind a fair value gap in an order block and a breaker block, and we also retraced up into a discount level above the 50%, swept the fair value gap, and continued down. Now let's go ahead and take this most recent displacement right here. So we have from here to here. Or it was right there at the time. So what is that, guys? Would that be another OTE? Yes, it is, 62% level. So on this day, the 62% level was very sensitive. We also left a fair value gap, so there was double confluence there. Could have taken a trade as well. So that is just a few examples of how you can use this to actually catch directional moves, guys. So if you outline the 15, you drop down to the 1 minute, you saw it displaced, change in the state of delivery, it retraced, displaced again, break a structure, another OTE, boom, another fair value gap, and then we displaced again after retracing. So you're seeing how all these concepts tie together, even down to, accumulation, manipulation, distribution, even down to retracing, expansion. If you guys are not familiar with all these concepts, we already covered them, guys. So that means you did not do your homework. So if you did not do your homework, it's going to be far lighter punishment than what I would receive when I didn't do my homework as a kid. There will be a lot less belt going to sensitive areas of your body. So it's not the end of the world that you didn't do your homework, but you must go back and do that if you want to understand this properly. And you only do this by getting deep in the charts and drawing out these examples. So that is one example of how you go from just analysis to entry, guys, using just this simple concept. Now, what was this over here as well? Well, this was another example where we had that exact same opportunity, guys. Now, in this exact example, it did not reach all the way for OTE. So that is going to happen too. It doesn't always have to reach for OTE, and there's ways to tell if it's trending or not based on the higher time frame. So this is where also higher time frame bias comes into play. But you can see from an intraday perspective, we still reached for a premium, and then we still, sold off from that premium/premium fair value gap. And if we drop down to the 1 minute on this one as well, you'll probably notice some other interesting stuff. So on this example here, you can see we came up into that level. What do we have? Market structure shift. Boom. No retracement on this example, but you can see here that if you take the displacement leg as a whole, where is it very sensitive from, guys? 50% level. So you could have been selling every time it dropped above that 50% level. Then we get back up into the golden zone. See how sensitive that golden zone is? And then we sell off. So notice, guys, did a few taps there. Then we came up to swept relative equal highs. Boom, golden zone. What do we also have? Fair value gap. Now it's starting to make sense, guys. Now you guys know the power of what you're actually learning. A lot of you are having an aha moment right now of how this all connects. So let's go over another example here. Let's see. This is actually a good example right here because it's actually within the same leg of price. So this will just go to show that you don't have to actually be 100% with the trend in order to make money if you know these concepts. So if we zoom in slightly, you can see, what do we have here? We had a fair value gap. What else do we have? We had a bullish displacement leg from down here. Boom. This bullish displacement leg. I think it's more so this displacement leg, to be honest. And then we had that 15-minute fair value gap right there. And then below that, we even had a 15-minute order block. Didn't end up reaching for that order block, but it still reached for golden zone, guys. Look at that respect of the golden zone right there. Perfect respect right there. And you can see price just shot up right here as well. So, and we also had a draw on liquidity in the form of this 15-minute fair value gap. And we were also at a discount. So we were going to probably retrace. And where did we retrace to? We retraced to that discount that we had just sold from. So it's crazy, guys. It's really crazy. Even counter trend, like in this example here, you could still make money, cut that draw up into that fair value gap / discount. And then again, guys, look at, you see right here. What is this? On a more fractal level, because price is fractal. Boom. What do we do? Displacement, golden zone, delivery, up. What do we do again? Displacement, golden zone / discount, delivery, up. Then what do we do again? Displacement, golden zone, delivery, up, guys. So this is happening all the time in both buy and sell direction on every time frame. And now you guys understand how to actually align it. Now, if you're using the turtle soup model, of course, you would not need the lower time frame. Like that could have just been an entry right there off golden zone. And then if you set a limit at that golden zone, you would have been in some pretty good profits. So no matter if you decide to use lower time frame confirmation or if you're just looking to top and bottom tick with the turtle soup with the limit orders, either way, this is the exact same process for finding where high probability entries form. So the next time you're on your chart, the next time you're drawing out displacement legs, fair value gaps, order blocks, and you're trying to narrow down to an entry at your session time, this is exactly what you want to be looking for. This is where the highest probability entries will form, and this is exactly where you want to be positioning yourself. Hope that helps, guys. This should solve a lot of your problems if you're getting faked out or if you're just simply confused at what level you should be placing your order, what level you should be marking. This is exactly how you go ahead and find that. So comment day 22 complete below if you enjoyed this lesson. Comment below what you learned. Have a blessed night, everyone, and I will see you in the next module.